Hello again, welcome to another episode of the Uranium Market Minute. Today is Friday, March 11th, and this is episode number 91. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. Thank you, each and every one of you, for being here. Really do appreciate all the support. As always, something that you can do to help us out on this channel, if you want to give back, is to like the video, share it around, subscribe to the channel. All of that helps us, with the YouTube algorithms, getting this video out to as many people as possible. As of course, we want to share this investing thesis around, so we feel there's tremendous upside. And of course, in a world with such high rampant inflation, we're all seeking yield. And that's, of course, what we are doing here, invested in uranium stocks. This morning, there's a very interesting interview with the Kazatomprom Chief Commercial Officer, Askar Badarbayev. And I'm going to talk about that interview, but I'm also going to link to that interview, the replay of that interview, in the description. So if you want to watch it yourself, watch the replay, I'll link to that in the description below. But there's a couple of points I think are very interesting from the interview that I wanted to highlight. But before we do that, then that'll be the mailbag section. Let's run through the daily scoreboard and look at the charts. Spot price of uranium slipped a little bit over $1 today to $58.50 a pound mid-market. Still a massive move on the week for the spot price of uranium. Yesterday, Sput raised another $20 million, and new investor capital purchased a chunky 1.2 million pounds more of uranium yesterday alone. Sput's 2022 year-to-date total now stands at 10.3 million pounds, and they've raised 558.7 million in new capital since the beginning of the year. So 10 weeks in, they purchased over 10 million pounds and raised more than $500 million. All right. The NAV of Sput is now 3.15 billion. They've breached $3 billion in their net asset value. Again, they took over UPC at 600 million. So what is that, 5x? They've 5x'd UPC's net asset value in 8 months. Absolutely incredible. This closed at a small discount to NAV yesterday. The trust traded down today as well. Even the spot price slipped a little bit. They were likely not at a premium to NAV sufficient to issue more shares. Although we have noticed that if they are greater than 1% discount or the premium to NAV at any point throughout the day, they do seem to be on it in terms of taking advantage of that moment in time throughout the day to issue shares through their ATM and raise some more money. Currently, they're sitting on 129 million in cash in their treasury. That's enough cash to buy, almost 2 million pounds. Turning to the ETFs, URA reported another very large increase of 820,000 shares. URNM reported a huge increase of 450,000 shares. That gave rise to 54.2 million in new mandated buying. Again, a new all-time high on outstanding shares for these two ETFs. Money continues to flow into this space. So in 2022, so far, these ETF inflows have given rise to 451.8 million in mandated buying. That's this year alone. That's the past 10 weeks, about 45 million a week. Just a lot of money flowing into this space. There continues to be positioning. The AUMs of the two large ETFs combined rose by 123 million yesterday alone. Basically, that means that their AUM now sits at 2.8 billion, which is a record high for these two ETFs combined. Just absolutely huge here. So that the AUMs fell below 1.8 billion on that pullback. That was sometime in late January at the depth of the pullback. It was 1.8 billion down from November. And so we're back above November highs in terms of the AUM of the ETFs. Now that's has to do with share price appreciation as well as new share issuance. Let's take a look at the charts. Starting out with URA down almost 3% on the day. Volume decreased quite a bit from the past few days. So as always, you've heard me say a million times, what we want to see in a bull market is increasing volumes on the way up and decreasing volumes on the way down. So far, that's what we have been seeing, increasing on the way up, boom, boom, and these pullbacks, the volume starts to trickle down. Wouldn't be surprised if we see a little bit further of a pullback. Maybe we get down back to the the resistance line somewhere around 25 bucks for URA. I wouldn't be surprised to see that. Even though we've had a big move in the spot price, the equities look to be a little bit exhausted here. In my opinion, what we are seeing in terms of the equities movement relative to the spot price is, I believe that the equities are not necessarily believing this move in the spot price. And what I mean by that is, I think that investors, retail investors largely across the space, are thinking that this move in the spot price is mostly or entirely driven by the potential for sanctions against Russia. And while we believe that that is at least partially true, I also believe that we are not about to see things go back to normal. So while we could see the spot price slip back down, I wouldn't be surprised, or I would be surprised to see it slip back down, into the high 40s. That would be a surprise to me. We could see a few dollar pullback here, but I think the pressure on the spot price and the pressure across the nuclear fuel cycle and the uranium markets in general is largely going to continue. And I don't think that this conflict between Russia and essentially the West at large really is what we're looking at here. To sum it up briefly, I don't think that's going away anytime soon. I really don't. And I could be wrong with that. Like I've mentioned, I'm not a geopolitical expert here, but what my take on this is that I don't see the West simply saying, okay, all is forgiven. I think that there's increasing tensions, and those tensions are likely to last. How long, I don't know, but I don't think this is going back to normal tomorrow. I don't think it's going back to normal next week, etc. Also, I have noticed since we've been in a risk-off environment for the past 2.5 months or so, in terms of the broad market and the markets in general, Fridays tend to get sold. The market tends to be concerned about news flow over the weekend and how the Monday open will react to that. So even with sectors with very strong fundamentals, very often I've been noticing that the Fridays are getting sold off. And that happened in the broad market again today as well. Okay, so as I mentioned this morning, CCO of Kazatomprom, Askar Badarbayev, spoke with Bloor Street Capital, with James Conner from Bloor Street Capital. This was a very good interview. It was very well done. So my hats off to James. And I'm going to put the link to this interview in the description below. And of course, this is important because Kazatomprom is such a big player in the space. They produce, Kazakhstan total, so not the attributable, but the total production from Kazakhstan is over 40% of global production. And Kazatomprom is about half of that, right? And so Kazatomprom, they're a major player in the space as a company. And what comes out of the company in terms of information has a lot to do with the sector, has a lot of influence on the sector. Similar to the Cameco conference calls, you often want to pay attention to messaging coming from the company. And so obviously we've heard various messaging from the company after the unrest in January that happened in Kazakhstan that was quelled quite quickly with the assistance of Russia and Russian troops. And things seem to go back to quote unquote normal for the company for the most part, although they did, even after that unrest, they did reiterate that supply chain constraints continue, and that was again reiterated today. So what are some points from this interview that I think are worth mentioning? Basically, okay, so just to kind of frame this out as well, Askar seems like a good guy. He seems very honest, very humble, and I really like this guy for the most part. I think that he was put in a pretty difficult position. He's in a difficult position right now, obviously, with the world watching what is happening in Russia, with Kazakhstan sitting right on the border of Russia, and obviously having geopolitical ties to Russia. Russia came to their rescue, just a couple of months ago, which puts them in a very precarious position as a country, with Russia having requested backup from Kazakhstan. It seems like Kazakhstan did deny that request. But either way, they're in a funny position as a country, and of course, the position of the company in terms of messaging to the market is a difficult one during these times. And I think that with all of that considered, Askar does a fantastic job. Now, most of what I'm going to share with you has more to do with implications on the market, really, and not about this company in particular. I'm not going to speak about my thoughts about the company, whether I think it's a good buy, et cetera, et cetera. I'm not going to speak about individual companies in terms of buying or selling. That's out of respect for our newsletter and our paying members. But obviously, what happens to CAP matters to the sector because they're such an important player. So James did not hold back on these tough questions. So one of the first questions, in fact, I think it was the first question, was asking him about secondary sanctions. So a secondary sanction would be a sanction of sorts against a company or country that is doing business with a country that is being directly sanctioned, or an entity that is being directly sanctioned. He said, obviously, that risk exists, but that Kazatomprom feels confident that they have the means to work around that and to avoid secondary sanctions. Okay. He did reiterate that operations are essentially going as normal, but did also again mention that they are continuing to see some supply chain constraints that is likely going to affect their production for 2022. So for those of you that don't know, Kazatomprom has what is called subsoil use agreements, and it's essentially like a production license from the state, and it's an agreement to produce X amount of uranium per year, and they are allowed as a company to go 20% in either direction from that agreed upon amount. And so for the past 3 years, and this year included, they have produced at 20% below those subsoil use agreements. They have done so supposedly voluntarily in order to not put overproduction and oversupply into the market and continue a downward effect on the price. They obviously benefit from higher prices, especially with a depreciating tenge, which is the Kazakhstani national currency. Most of their costs are in tenge, but they sell in US dollar. So a depreciating tenge does help the company, and that is currently happening right now. The tenge has been falling precipitously. So essentially, these secondary sanctions, he did say that they have a workaround for that. They are seeing supply chain constraints, and he does think that they will be, 1 to maybe 2 tons of uranium in production lower than those subsoil use agreement, lower than 20% lower than their subsoil use agreement. So while they expected originally to come in at 22.8 thousand tons, they believe they will be closer to 21 to 22,000 tons. So it's about a 2 to 3 million pound shortfall that they are expecting currently for the year 2022. It's not a lot, but it's something, right? And I believe that that's total production, not attributable. He also said that as of yet, transit has not been impacted for the company. So we have heard that there are potential issues around shipping through the port of St. Petersburg in Russia. He did say that the uranium, when they're shipping U3O8, the uranium is owned by them throughout that shipping cycle, regardless of where it goes through. So even though that uranium could go through a Russian port, it still has their name on the can, and it's still owned by them. Now, if that uranium gets converted in Europe and then enriched in Russia and then exported, that no longer is Kazakhstani uranium, that's Russian uranium at that point, as far as sanctions and geopolitical constraints are concerned. And he did say, of course, that they have alternative routes. They've been working on a route that would go through the Caspian Sea. They have a route that can go into China. They, of course, can ship to China and do what's called a location swap. The Chinese hold inventory around the world, so they can ship to China, and then the Chinese pounds can go to whoever is buying from Kazatomprom as a swap. China is happy to do that and scalp a little bit on each transaction. He reiterated that they have 6 to 7 months of inventory on hand currently. If I recall correctly, their ideal was 8+ months, so that's a little bit on the low side, but still not alarming. They have next to no exposure to the Russian ruble, so the price action of the ruble has obviously been drastic, to put it lightly. So that does not seem to be affecting them. 20% of their production has, let's see, where's my note here? 20% of their production affiliated with their Russian joint ventures with Uranium One. So that probably has the biggest risk for them in terms of implications from the current situation, Uranium One production. So they have these mines that are joint ventures with uranium, those are associated with Uranium One. And so the Kazatomprom production coming from those mines I don't know whether or not that actual production has that uranium one association. That's something that is worth considering. Obviously, the pounds that go to uranium one are, of course, owned by uranium one. Supply chain risks. So all in all, really, what we're talking about here, in my opinion, my takeaway from this interview is that they haven't really seen any physical impacts to their production at this stage, besides supply chain constraints. And that's obviously not unique to Kazatomprom or Kazakhstan. We're seeing that everywhere. We're seeing that everywhere across the globe. I went to order a dishwasher yesterday. Anecdotally, they told me they would be more than a year before maybe we get lucky to have it in a year. There's just major supply constraints all over the world right now, and that's not unique to Kazatomprom. So that's not really a unique story there. The overall feeling of the interview, I have to say, did not really give me the warm and fuzzies around expectations that their production is not going to be impacted by the present situation at all. So what that means exactly in terms of production numbers, we don't know. What that means in terms of, will more pounds being produced in Kazakhstan end up going east rather than west? How it ends up, affecting the price of uranium, if that is the case. These are all speculations, not really sure. But I will say this fairly confidently: we're not about to see a ramp in production in Kazakhstan. That's not about to happen. They have already committed to that 20% below subsoil use agreements through 2023. And so what that means is they have announced their budget for 2022, and the way that their production works with ISR production is they have to drill out these well fields. They have to establish the well fields, and they have to start injecting the lixiviant, the sulfuric acid, into the deposit. And all of that takes many, many months. From the first well drilled to the first pounds pulled out of the ground is close to 12 months, where they get to peak production at least 18 to 24 months from the drilling of those well fields. So when they tell us that they have firmed up their budget for 2022, that means they know what their production is likely to be for 2023, barring any unforeseen events. So we will not know about the 2024 production expectations until they disclose their 2023 budget, which will happen late in the year. So all of that said, there's not about to be a ramping here. And so much in this situation is speculative. And the takeaway for me here is that there's not risk in terms of greater production coming from Kazakhstan. All of the risk with this situation has to do with disruption. And that's where we're presently sitting. And that's why, again, I highlight a market that is ripe for disruption, because it is, and it continues to be. And it is very, very, very slow for the uranium producers, not only in development of new mines, but even care and maintenance mines, to come online to respond to these types of situations, which is why we can see massive price overshoots. And I honestly still believe that potential is on the table, and it could be coming shortly. Either way, I think if you are invested in this, or you're interested in investing in uranium, I highly suggest that you watch that interview. With all of that said, I hope that you all have a great weekend and get away from the screens, get outside, spend some time with friends and family. I guess this is becoming my Friday pep talk. But another crazy week. Obviously, the huge moves in the spot price. We're very excited about this investment. If you are a member, look out for the weekly watch list update on Sunday. I have some further thoughts to share on the markets that I didn't share in today's video or in the midweek update that I put out for members on Wednesday evening. A lot is happening in this market right now. So if you are a member of Uranium Insider Pro, make sure that you check out the weekly watch list update on Sunday. I publish that before the open of the ASX market, which is 3 p.m. Pacific time, 6 p.m. Eastern time. And I will send out an email bulletin to notify you when that is published. All right, take care, everybody. We will see you on Monday. Many thanks and cheers.